I'm Alexander Hefner, your host on The Open Mind. I'm delighted to welcome today's guest, Professor Ishwar Prasad. He is the Professor of Trade Policy at Cornell University and author of the upcoming book, The Future of Money: How the Digital Revolution is Transforming Currencies and Finance. Thank you so much for joining me today, Professor.
It's my pleasure, Alexander. Thank you so much for having me.
An op-ed that you wrote in the New York Times on the future of cryptocurrency, what we know informally or formally as Bitcoin, Ether, it really resonated with me in kind of bringing to bear the realities of this moment, which is that for many years we've now had an online storage facility for normal currency, as it were, right? Dollars or pounds. And now we are storing a currency that itself is a technology. When you think of where we are right now, just to begin with, does it surprise you? Did you always think we would be at a place where a digital currency was worth $30,000 in effect? And that, this is at the time we're recording this, this may change, that at least in its infancy, it would be worth more than a dollar or a traditional currency.
So the fact that a cryptocurrency like Bitcoin has a price of about $33,000 when it's just a piece of computer code is certainly a shock, Alexander. But what is not a shock is the fact that we are here because what Bitcoin started was an important technological revolution that was likely to happen at some point in terms of making digital payments a lot easier. Now, of course, in the US, we have been moving towards digital payments, but in other countries, this move has been happening even faster, where people are essentially giving up cash and moving towards digital forms of payment. But what Bitcoin promised was something more than just digital payment. Right now, if you want to undertake a digital payment, you have to go through a bank or use some financial institution, maybe a credit card, a debit card, a swipe of your phone, a swipe of your credit card. What Bitcoin promised was something radical and fundamentally different from existing digital payments. That is, it promised a medium of exchange, that is an ability to conduct transactions without involving any trusted third party, such as a central bank which provides money or a commercial bank. So that was the big promise of Bitcoin, that it would allow us to conduct transactions much more easily, much more cheaply, without involving the government or any financial institution. It turns out Bitcoin didn't work very well in terms of delivering that promise, but instead, Bitcoin is now being held as a store of value. That is, people are holding on to it as an asset, and of course, largely a speculative asset, because Bitcoin doesn't seem to have any intrinsic use. It's not working very well as a medium of exchange. So somewhat paradoxically, and to my surprise, and to the surprise of most other economists who are watching this phenomenon, even though Bitcoin failed in its stated objective, now people are holding on to it because they believe its value can go only one way, which is up.
Do other currencies currently possess, other cryptocurrencies, fulfill the object in the way that you say, ultimately Bitcoin does not fulfill that object, the objective? But there are many cryptocurrencies that have emerged, and it seems like a new one has emerged every day. So are there ones that are actually fulfilling the promise that you described?
So that's an excellent point, and it comes to the heart of what Bitcoin has set off. So if you think about why Bitcoin doesn't work very well as a medium of exchange, it turns out that the process by which transactions are validated, because there is no trusted third party involved, involves a lot of computational power. And this is very inefficient. It's bad for the environment, but it's also very cumbersome and slow. It takes about 10 minutes for a transaction using Bitcoin to be validated. And the cost of one Bitcoin transaction over the past year has averaged about $20. So obviously you can't go out and buy a cup of coffee using that because the transaction cost would be much greater. Another thing that Bitcoin promised was digital anonymity. That is to say, you and I could conduct transactions putting only our digital identities visible to the rest of the world. So in these dimensions, Bitcoin has not worked very well. And the additional issue is that the value of Bitcoin is very volatile. As you pointed out, the price of Bitcoin changes minute to minute, and by a large amount. It's as though you could take a Bitcoin into a restaurant in one day, be able to afford just a cup of coffee, and another day a full lavish meal. So what Bitcoin has set off is a wave of cryptocurrencies that try to fix each of these flaws. There are some cryptocurrencies such as Monero and Zcash that provide greater anonymity, but are much more cumbersome to use. There are things called stable coins that have come up right now that try to provide more stable value. And how do they do that? Essentially, they do that by holding stores of existing fiat currencies issued by central banks. So for instance, there is one stable coin called Tether, and each unit of Tether is fully backed by holdings of US dollars. So the price of one unit of Tether has stayed relatively stable at about $1. So what we are seeing is this wave of cryptocurrencies that are really trying to address some legitimate needs in terms of better digital payments, both within countries and across countries. The technology is maturing, but it's not quite there yet.
Knowing that crypto is not just sort of a curiosity, but it can have a real world effect on the market and jobs and people's livelihoods. Should we now think of it in that light? You know, that it is not necessarily the asset that it presents itself at the value that it is at any given day, but its fluctuations can have a significant impact on the market as a whole and the economy as a whole.
Yeah, the numbers are astounding, Alexander. Just about 3 months ago, the total market value of all cryptocurrencies put together was a little over $2.5 trillion. That's trillion with a T. Right now, that number stands at about $1.4 trillion. So more than $1 trillion worth of value has been wiped out. And you might think this has very serious risks, and maybe the government should do something about it, because certainly having $1 trillion vanish from financial markets in a relatively short period should give rise to all sorts of concerns. One concern is certainly that the speculative bubble, which is what these cryptocurrencies have turned into, could end up hurting retail investors. So as we saw in the GameStop phenomenon that was egged on by the Robinhood platform, the real risk is that retail investors might be coming much later to the party. These are people who have much less ability to maneuver around financially. They may put their life savings in this and realize ultimately when the market crashes that their savings have been completely depleted. So from an investor protection point of view, certainly there might be a role for the government, but one could take the alternative perspective. So long as the government and the Federal Reserve or central banks warn investors of the risks, then investors on their own taking these risks, because we know that Bitcoin has no fundamental value, and its value from an economist point of view should be pretty close to zero because it's not delivering any real service. So then if investors go out and decide to invest, then it's their problem. Another issue is whether there could be financial institutions that are exposed to cryptocurrencies and the risk they entail. After all, we had a major financial crisis just about 12 years ago as a result of various financial innovations. But most commercial and investment banks have been relatively cautious this time. Certainly, some of them have dipped their toes in the water. A few of them are making crypto-related products available to their investors to meet demand. But by and large, the exposure of other parts of the financial system to the crypto market has been relatively limited. But there are still concerns on different fronts, not just financial stability, but if you have anonymous cryptocurrencies available, you know, it makes ransomware attacks a lot easier because of the anonymity of crypto coins. We might have these cryptocurrencies, especially if the technology matures and makes them cheaper to use, being even more widely used for money laundering, terrorism financing, and other illicit activities. So those are the sorts of concerns about illicit activities, both within and across borders, that I think is getting governments very concerned about cryptocurrencies.
Right. So you have the threat of a bubble and its impact on other facets of the economy, in really uncharted territory and not really understanding the extent of exposure. You have the secretive exchanges that can be used for malevolent or downright illegal purposes, as you just described. But at the end of the day, ultimately, what makes sense most about crypto, in my estimation, and you get at this in your op-ed, and I imagine you focus on it in the book, is the idea that crypto just makes sense for a globalized world. It makes sense that the extent to which you don't have barriers and interest rates that are governing people's lives, but you have some kind of equity and exchange of commerce, and that's what, like, philosophically resonates or registers for me. In actuality, the idea that crypto is, as we say at the moment we're recording this, some $33,000 relative to a dollar, and a hard day's work, which you'd be paid in a dollar or a euro or yen or whatever, that doesn't really add up. That doesn't really make sense. But the idea that we shouldn't have a society in which currencies are boundaries to our equity and to existing in a world where we can equitably and transparently engage in commerce across border, that makes sense. That idea of Bitcoin or crypto makes sense to me.
That's true. The notion of leveling the playing field so that the major financial institutions are no longer dictating economic destinies, and where the masses have easy access to digital payment systems that don't require them to set up expensive bank accounts where they need to maintain large balances, that is certainly an important issue. In fact, even predating Bitcoin, there is the use of mobile technologies around the world, even in middle-income countries or low-income countries, such as Kenya. Mobile technologies have played a very important role in giving people access, literally at their fingertips, to easy digital payments, which is good for customers, which is good for businesses that don't need to don't need to handle cash. So these are all very positive developments. And there is a real need to have cheaper and easier payments accessible to everybody, not just domestically. You mentioned the international aspect. That is really huge. There are many economic migrants from, say, Mexico, from India, who are working in the US, who send money back to their home countries, and they have to pay very large transaction fees on those amounts that they send back to their home countries. It takes a lot of time for those payments to clear. It's difficult to track those payments. So certainly the ability to use cryptocurrencies across national borders can generate much more efficient payments and get around all these impediments to payments, which would be a very good thing. The problem is how one manages the fact that you have conduits for much easier, cheaper, and quicker payments, and prevent them from being misused for illicit and illegitimate purposes. So that's the balance that I think we are contending with right now.
In a sense, you're saying that the problem does exist, or the notion of not erasing currency exchange, but having some more transparent and open system, that really is a need in a globalized society, and that our current system is antiquated, obsolete, and betting against the masses and controlled by a few people. But you're saying crypto is not the solution. It's not the solution to that problem, at least in the way that it's currently devised. And I just ask on top of that question, when we hear about Chinese miners of crypto and the threat of the integrity of crypto on that basis and the availability of crypto, some of these currencies could be infinity. Some of them have a max of a certain number of coins in distribution. But ultimately, the question about hegemony, financial hegemony and dominance is very much related to Bitcoin and some folks' skepticism that Bitcoin is being used or deployed as a Trojan horse to advance the Chinese currency specifically?
So there is a lot rolled into the points you made, Alexander. One of the issues to begin with on Bitcoin is why people think it is going to have any value. And it seems to be largely driven by the fact that there is hardwired into the Bitcoin algorithm a specific cap. There can only be 21 million Bitcoins mined at the end of the process whenever this runs out. And so far, about 18.5 million Bitcoins have been created. And this seems to be alluring to investors, the notion that just like gold, there is this very scarce thing. And unlike central bank money, which, the Fed can go out and print at will, the fact that this thing is scarce is maybe what gives it value. Of course, to an economist, this sounds very strange. Scarcity certainly helps, but just the fact that something is scarce cannot possibly create value, especially when that object, digital or otherwise, has no intrinsic use at all. But you're certainly right that right now, what Bitcoin has created in terms of its legacy, whatever happens to Bitcoin itself, is a move towards digitalization of payments. And there is a very interesting phenomenon that we are beginning to see right now, which is central banks beginning to issue digital versions of their own currencies. So in fact, the Chinese central bank has started experimenting with a digital version of the Chinese currency, the renminbi. And it's likely that sometime in the next 3 to 5 years, they will roll that out nationwide. So why are they doing that? They're doing that because in China, digital payments are right now the norm, but there are two digital payments providers, Alipay and WeChat Pay, which are doing a fantastic job of providing very cheap and reliable payments, but the government doesn't want the central bank money to become irrelevant. So they're essentially digitizing the central bank money so that renminbi still remain relevant in the economy. In the US, there is some talk of moving towards a digital dollar. It could be, again, to provide better payments, but also to give people much easier access to a digital payment system without having a bank account. So we are seeing some big transformations in the nature of money coming thanks to Bitcoin.
Yeah, I mean, isn't it true that we've effectively had the digital dollar since we've been able to manage our finances online? I mean, it almost feels as though we do have that, even though we don't, if you know what I mean.
That's right. The reality is that payments are becoming increasingly digital. I mean, these days, most of us conduct transactions using a debit or credit card, or more often with just a swipe of a phone connected to Apple Pay, or perhaps you and I might, split a dinner check using Venmo. So that is certainly becoming the norm. And that raises the question, in the middle of all of this, what role does official central bank money still have? Do we even need it anymore? And if you look at the long arc of history, this is quite a fascinating development because, 2 or 3 centuries ago, before central banks were created, you had various kinds of private currencies circulating and competing with one another based on how much faith people had in whoever was issuing them. And then you had a period of competition between private currencies and government money. And then the emergence of central banks basically wiped away private currencies. So only official currencies issued by central banks really have been dominant in virtually every country for the last few decades. But now we are once again seeing private currencies competing with government currency. And again, as an economist, I think competition is good so long as it is managed. And what central banks are dealing with right now is how to make sure that their money still remains relevant and of practical value in the economy.
I see what you're saying. But when we know that we can store our hard dollars as, in effect, digital currency, doesn't it kind of make the point moot? I mean, with respect to the question of a digital dollar or, a digital euro, to me, it's kind of hard to fathom it. But I do understand the point you're making about competition. I just think effectively, we already have that,
To a large extent, we do. You're right. If you think about the functions of money, We have prices when we go to a store denominated in dollars. So that's the unit of account function, which will certainly remain. Then there is a medium of exchange function, which is the use of the dollar in transactions. And there you're right, that many of these transactions are already in dollars, even though our bank accounts may still be denominated in dollars. And I'm sorry, the transactions may be purely digital without involving central bank money. And then there is a store of value function, the sense that assets that are denominated in dollars are still going to have value. So we might actually see a separation of these different forms of money. So we might continue to have prices denominated in dollars. The dollar might still be very important as a store of value, but as a medium of exchange, official currencies might become much less important than they are right now and giving way largely to displacing existing currencies. And this is actually happening in some countries. In Sweden, for instance, the use of cash has almost completely disappeared. And in Sweden, the digital payment systems like Swish work perfectly well. But even there, the Swedish central bank, the Riksbank, is issuing the digital version of its currency or experimenting with the digital version of its currency, the e-kroner. Why? Right. Because they want to keep central bank money relevant in case there are some problems with the private payment system, so that you still have a digital central bank payment system that can function at a time of financial worries about the private payment system. So it could end up becoming a backstop rather than anything fundamentally important in the economy.
In the Swedish example, one print dollar is no more valuable than one digital dollar, right?
That's correct. The value of the two is exactly the same, but the print version of the currency might cease to exist and it might all become digital. But during the transition period, the two will have exactly the same value.
And your op-ed seems to suggest that the storage of real dollars or the storage of money through a central bank system, like the way you might store your money online with a US bank, that is still far and away safer than storing cryptocurrency.
That is correct. Certainly, if we now are in a position where the Federal Reserve, the US Central Bank, which I will refer to as the Fed, could offer each of us an account so that we have an account with the Fed. Unlike a bank account, it would have no fees. We could just connect it to an app on our mobile phone, and then we would start using central bank money just digitally rather than in the form of dollar bills. But that has certain risks. I mean, it sounds very convenient to use, but what if all of us decided that we'd rather move our money to those central bank accounts and take our money out of the commercial bank accounts? That would be a bit of a problem because commercial banks are still very important in the economy in terms of creating credit that allows us to buy automobiles, houses, that allows firms to invest. And you don't want the central bank to be in charge of allocating credit in the economy. The other concern, which I think we need to think very seriously about, is if all payment methods were only in terms of digital forms, either through, say, Visa, MasterCard, other forms of cards, or central bank digital money, there are concerns about whether we would have any privacy and confidentiality left in our transactions. And maybe some might say that the horse has already left the barn and we have no privacy anymore. But I wonder if we really want to live in a world where anytime I buy you a cup of coffee, either a financial institution or the government is going to know about it.
In an age of ransomware, though, you're saying pretty definitively that you are more protected with your dollars stored in a traditional bank than you are with your crypto on one of these various platforms.
That's correct.
Are major US banks basically less hackable than crypto platforms?
There are other protections as well that make it more likely that if you lose money that you have in your bank account, the bank is going to make you whole because they're in turn insured to some extent by the government. The wonderful thing about crypto is that in many cases, such as in the case of Bitcoin, no one is in charge, which means that nobody can prevent you from using it. Nobody can be, censored from using that network. But at the same time, if you lose your password to what is called your digital wallet, there is nobody to go to. You can't pick up your phone and call your bank and say, can you please reset my password? Your money is gone.
who decided that it was going to be capped? You know, you said basically you can write your own destiny, but in the seconds we have left, who decided that there would be a maximum X, number of Bitcoins, for example?
That is the remarkable and wonderful thing about Bitcoin. We do not to this day know who the creator or the creators are, but whoever designed the algorithm has designed it in a really interesting way. A lot of these issues about how Bitcoins are issued, what is the process by which Bitcoins enter into circulation, what the cap is on Bitcoins, these were all hardwired into the algorithm. If everybody in the Bitcoin community agreed, they could change it. So this is why people power becomes really important. The Bitcoin community now can take decisions, but all of this stuff was designed in a really remarkable way, and the technology itself is a marvel. So the last thought I'd leave you with, no matter what happens to Bitcoin 5-10 years from now, its value may be zero, its value might be $1 million. It's really set off a revolution in money that is going to affect every one of us for a long time to come.
Professor, I want to encourage all of our viewers to check out your upcoming book, The Future of Money, How the Digital Revolution is Transforming Currencies and Finance. Well, we have to have you back here on the Open Mind, because I don't think you are just inspiring revolution in currency and finance. What dictates currency and finance? Borders. What dictates borders? Security. I think ultimately we may be talking about war and peace. And I think the crux of your answers get at that very point, whether it's US and China or other countries involved in the preservation of their systems. And a lot hangs in the balance, especially if folks are going to move away from their own central banks. So I look forward to you joining us again in the future. Professor Ishwar Prasad, thank you so much for your time today.
Thank you, Alexander. I enjoyed our conversation, and I look forward to talking about geopolitical and other issues at more length on another occasion. Thank you very much.
Please visit the Open Mind website at 13.org/openmind to view this program online or to access over 1,500 other interviews. And do check us out on Twitter and Facebook at OpenMindTV for updates on future programming.
Continuing production of The Open Mind has been made possible by grants from Ann Olnick, Joan Gans Cooney, Lawrence B. Benenson, the Engelson Family Foundation, Alfred P. Sloan Foundation, the John S. and James L. Knight Foundation, William and Flora Hewlett Foundation, Joanne and Kenneth Wellner Foundation, and from the corporate community, Mutual of America.